Going live, going live. Are we live yet? We appear to be live. Awesome. So welcome. Hey guys, one of the things I want to hit tonight is what do you do with profit? What do you do with your profit in your business? All that junk that we do in business of bringing in money, and we're spending time making money. We're so busy going out doing the stuff to make the money. Then we get confused, and just the number of businesses I talk to that just get wrapped up in what do you do with it? How much do you save for taxes? How much should you take home? What should you be reinvesting in the business? And then a lot of questions about just the money. Now, if you're one of these businesses that you just haven't started really making a lot of money yet, well, that's okay. How do you? Because the habits you start with $100 of revenue a month is the habits that keep going. You really kind of get a firm foundation for what you're doing. So I'm glad to be with you tonight. It's awesome to kind of hang out here. I've been meeting with 2 or 3 people in the last couple of days, and been meeting with the Building Your Own Business team, the mastermind group that we've got that's doing Build Your Own Business. It's fantastic to be hanging out with them. And so I'm getting a chance to kind of get upfront and personal with a lot of the issues. And I'm just constantly hearing a lot of the issues and the challenges that we have from dealing with small business startup. So what I'm doing, for those of you that don't know me, what I'm doing is I'm Dale Callahan, and I spend a heck of a lot of time in the last 10 plus years coaching small businesses, coaching people, entrepreneurs, but they're not all small businesses in the sense that we think of. They're people like, they're professionals. They're people like you and I that are out there in the corporate world, and they're doing stuff, and they're looking for, how do I grow my income? How do I get more influence with people? How do I start a small business? I mean, just so many people are wanting to. I talked to one guy last night. Great job as an engineer, but it's not where his heart is. His heart's somewhere else. And he made some comments to me I just won't repeat, but he just said that he just felt empty inside, because even though he can show up at work, it's just like he was thinking, he said, is this what I'm going to have to do every day for the rest of my life? It just feels empty. Now, whether he moves from where he is now to another company or to another opportunity, or starts a company, and that's where his heart is. His heart is to start an organization or a company doing some cool things. So what we want to talk about right now is, no matter where you are in that process, how do you deal with the cash? What do you do with it? So one of the things that we want to look at is doing some fun stuff with a book called Profit First. And this is by Mike Michalowicz. Mike Michalowicz. I'm so sorry, Mike, if you hear this. I don't know Mike, so I'm probably butchering his name, but he's written several books on entrepreneurship. Does some cool stuff. I wrote a post just the other day on my blog, and I will just show you here. This is the post. What should I do to pay myself? How much should you pay yourself? And that's really the spirit of it. And when we come over here, we can see this is his book on Amazon. So I've got a link over there on the post. I'll put a link in the Facebook page to this also. I don't totally do what Mike does. I do some very different things, but his principles are really, really awesomely easy to follow. And I think that's the way we want to go, is doing easy. I'm a big fan of Dave Ramsey in terms of his financial planning for business. I mean, for individuals, because it's just simple. That's that watered down to earth, basic step 1, 2, 3. He calls them baby steps. And we might make fun of stuff like that, but we all want that. When business owners I'm talking to, we all want that kind of step 1, 2, and 3, especially when things get complex. And boy, they get complex in a hurry. They go from, I just want to sell a widget, to dealing with accounting, dealing with systems, dealing with web systems dealing with files and downloads and money and sales taxes, and things just go from, in any small business, they go from a couple of ideas to I'm just totally overwhelmed. And if you're that person that's sitting there thinking, wow, I have a day job, I have family, I have other things I'm doing with maybe church or extracurricular activities, taking kids out to school. I don't have time for this. You do have time. That's a big lie we tell ourselves. We can make it happen, but you need some common sense systems that will help you make it happen. So what we'll talk about right here is just some of those common sense things. So I'm going to walk you through a couple of things. And first of all, I'm going to make the assumption that you are a business that is making less than $250,000 a year in revenue. If you're a small business, that's fine. That's probably where you are. If you're not, if you're in here, that's above where you are, or you're above that, then these numbers are adjustable. You can go to Mike's book, but the basic concepts are the same. So when you bring in money to a company, it looks like this. It's called revenue. It's the same thing as we might call income for our household, but we call it revenue in a business. And so revenue is all that money that comes at you. Every check that comes at you, no matter how it's deposited, it's all that money that comes, it gets in your hands to go in the bank. Now, when we get that money in a business and we have revenue, what do we do with it? So there's two dangers that every single business seems to have. This is especially true of small businesses. The first danger is you forget, or you just don't know, or whatever. You don't save any money of your business for taxes. I met with a business a couple of years ago that had an awesome year, a small business. They had made $80,000 that year in revenue. And the guy had just put it in his pocket and run, and he was having a blast. He was buying stuff, and he felt really good until the end of the year came, and he had a tax bill on $80,000 in revenue or profit. I forget. Whatever it was, his tax bill was a heck of a lot more than he had in the bank. And so he now was in debt to the IRS, which is a really, really terrible group of people to be in debt with. So you see that all the time. Usually it's much worse than his situation. Usually that debt kills the business. And that one of the biggest reasons businesses go out of business is just poor handling of the money. And we forget the stupid thing of paying taxes. So if you're making money and you need to be setting some aside for taxes. So the basic formula that we would use here, I'm going to just give you the Mike's thing. So you got revenue coming in the door. You need to set aside 15% for taxes. So, and I mean set aside, like, okay, here's how much money we made this month. Let's take 15% and let's throw it over into the bank, a separate bank account. And Mike would actually recommend in Profit First that you build a separate bank account. We don't do that, but that you put a separate bank account and that you just throw that money aside. And the reason is, if you ever had money in savings or in a checking account and you're thinking, well, I'm going to set this over here for something, and suddenly you realize it's gone because you spent it. So it's that intentionality of moving the money because you don't want to actually accidentally get spent. So moving that money, and then you end up with 15% stuck aside. Now, also, you can do, what we do is we do 25%. Now, maybe we're in different tax situations. We're also maybe more conservative. It doesn't matter though. The point is, you have a set number. So I like 15% because it works with the rest of his formula. So of all the revenue you get, you take 15%. So that's off the top, right? That's off of the top. So when we grab that 15%, we throw it over. Now, how much do you keep? Now, again, I'm talking of revenue, and probably if you're sitting here watching this, you're thinking, wait a minute, we haven't done the books yet. We haven't said revenue minus expenses is equal to profit. No, we haven't. And I'll talk about why. in just a second. The second thing, though, that you do, a lot of businesses, especially small businesses, the owner does not take anything home. The owner shells out money and has employees often, and they don't take anything home. What a disaster. And I see a lot of businesses that have been in business for years, and the owner may have a full-time job, and now he or she owns a business, and they don't take anything home. What's the point in that? That's no way to run a business. If you cannot be financially rewarded for what you're doing, quit. Why? There's no point in this. That's not, you are not running your business is running you. So you need to take money home. 50% of the revenue. That's right, I said 50% of the revenue. So here's how Mike breaks it down. I'm going to jump over here real quick to my back to the post just to look at the numbers and show you kind of how the numbers work out. I think I stuck them here. Yeah, right there. And hopefully you can see this in your screen, but if not, I'll read it to you. What you want to do for all the revenue that comes in, 50% goes to the owner's pay. 15% goes to taxes. 5% of that money should go to reinvest for the company. In other words, you leave it in the company to use for expenses and reinvesting and things like that. So if you've done your math, you're thinking, well, wait a minute, that's 70%. What about the other 30%? The other 30% are the expenses. Now, if you're an accountant or somebody, you might be saying, you think, Dale, I've done an MBA course, and you don't know what the heck you're talking about because you're doing this all backwards. Well, this is one reason I love Mike's stuff is because he takes this in a common sense fashion. So let me just go back here. The typical way we think about a business is revenue minus expenses is equal to profit. That's basic business accounting. If you use QuickBooks or anything like that, that's what the reports look like. So Mike kind of he says, we should think about this backwards. For the reasons I just said, that so many people end up underwater and they don't get to take any money out of their company. You should look at your revenue minus your profit, and that should be your expenses. See, we just flipped that around. Now, that doesn't make any sense, but his point is you should keep your expenses to 30% or less of the revenue. So your expenses should be 30% or less of a revenue of a company. Now, that means you, as the business owner, have got to be in control from day one of that company. You've got to be in control. Here's what people do when they start a business. They're like, I'm a business owner now, so I need some really, really flashy business cards. So we go out there and we grab our business cards and we think, well, no, we don't just need that plain white. We need to get them cool looking. We really need to work on them. And so we have zero revenue, but our image of our business is so important. But what image? There's nothing. You're a facade. You're trying to create something, and you're trying to go where the Apple went and the Steve Jobs went. With this experience. You got to start somewhere, and you don't start there. So what people do is they go out and they get flashy business cards. They go get flashy furniture, and they justify it all by, I've got to have this because I'm a business. So their expenses go out the roof. Their profits are not there. And sometimes their profits are non-existent at all. I worked with a business at one time that I was not invested in, but was helping the owners. And the owner got an investment of cash. So he gets a big fat check. So it was pretty big and fat. And it had hundreds of thousands of dollars in it deposited to the bank. And he wants me and to run with him to go now purchase some equipment that was needed. And he goes into this store, that sold computer systems, and walked in the door and said, I need 7 of the most expensive computers you have. And I was just like, what? That's not how you run a small business. But he was thinking, I got tons of money. Now we need to step up the game. No, you got tons of money. Now you need to generate tons of revenue. It's all about sales. So what to do in a business is you keep your you keep your expenses at 30% of the revenue or less. That means if you make $1,000, you should not spend more than $300 per month, right? And so that kind of common sense principles is what you need to be thinking about in terms of your business. So this is just, you might say this is just common sense. But you know what? Common sense is not very common. So, so Deborah, thanks for. I'm just looking back at Facebook. I got so many windows open here. It's kind of making me crazy. Deborah, thanks for joining us. By the way, Deborah, and I'm gonna pick on you for a minute, Deborah. Deborah's here with us on the Facebook channel at the moment. But I know so many of you are looking for new work, and you're challenged. Deborah, I mean, this gal just really helps a ton of people go out and do resumes now, helping them connect what they do to the right people, and she's wildly successful. If that's what you're looking for, check out Deborah. But she's also somebody who started a business and went very, very successful by doing some very common sense stuff. So, yeah, I'm glad. It was great. Deborah's great to work with. She said, you didn't spend much money for your business that's awesome. So, and Deborah, yeah, I would go with Profit First. You don't even really have to go buy the book. If you go to the podcast, there's a downloadable thing. I'd hate to take my money out of Mike's pocket, but I think he's doing okay. But he's got a downloadable worksheet that's free that you can go to, and it kind of helps you work through this. The book's got a lot of great examples, but I'm kind of a shortcut guy, and I get me to the point. So when we look at these principles, we're going to look at just how do you use the money. Now, the reason this is kind of like the Dave Ramsey thing again, it's step 1, 2, and 3. It's just really basic, simple, stupid common sense. You get the revenue, and what Mike would suggest is you open different bank accounts. Now, we don't do that because that's just not the way we did it. But we were doing something similar to what Mike was doing already. So when I saw what his book said, it was it spoke to me. One of the things that I run into in small businesses, though, is you should never pull in employees. Now, I know you're going to tell me never. That's one of those never words. But pulling in employees when you're in a small business before you're making $250,000 in revenue is really dangerous. Employees are, and especially in today's day and age, with taxation and with government. And I know we just went through a presidential election, and I know things change from one, whether they're Republican or Democrat theoretically, but let's just face it, all government is going to grow on taxation in some way. They'll call it something else. They'll call it a license or something, but it's taxation. And it's going to get better sometimes, and it's going to get worse sometimes through administration. But generally, you're looking at government, the amount of money that they take from you goes up. That's just, over time, it just goes up. But that's not really the hard issue. It's the amount of complexity they put into your business goes up. When you move from you doing the work to maybe hiring some part-time people, which is awesome, by the way, under $250,000 in revenue, part-time people, outsource people, get the work off Upwork or Elance or those various tools, Fiverr. Get your best friend to help you and come do some work, or your kids, whatever works, where you're just paying out some cash. And then you do it at 1099. And we do a lot of that, 1099 at the end of the year, where you're just paying some individual and you just give them a tax thing that says, hey, I paid you this much money. That's awesome. When you move from that, though, to hiring them as an employee, suddenly, and I remember speaking to my accountant about this, suddenly you realize there are government agencies that notice you and are taxing you. Again, it's not always called a tax, but they're taxing you, and you don't even know what these agencies do. You don't know how they help you. And I would bet that they don't help anybody. They don't help you, and they don't help your employee. Because generally when we have an employee, what we want to have happen is I want to do some work, and I want to give my employee money. It's an exchange. They're providing service to me. I'm giving them money. But when you get all the government involved, that money starts going in other places, such as unemployment compensation. Now, can that help them? Maybe. Social Security taxing, maybe that will help them sometime way out in the future, if it's still there. But there's other things that it depends on your state and your city, and there's all kinds of other taxes. So what happens is you end up with, as an owner of a business, and you end up with an employee, and you just have a huge burden, and you just don't have the money to cover it, and you don't have the manpower to cover it because you're doing the work. So that's why you see so many small companies don't really have employees, and a lot of small companies that do have employees, and they're saying, "Oh, I've got to have these employees." Well, they're usually underwater. I see many, many small companies who are making less than $60,000 a year. The owner. Okay, I've run into this guy recently, just a generic guy. He's bringing home less than 60, but his revenue in his company is in the millions. So theoretically, he's doing awesome. I mean, if you look at the books, he's doing awesome, and he does have employees. So you think about plumbing companies and some of these where they got lots of trucks rolling. But the owner's really not getting rewarded. That's just no way to run a business. I mean, I'm not suggesting the owner needs to be making 10 times what everybody else makes. I don't mean that. But at that, for the level of risk that a lot of business owners have versus what they take home, it just doesn't make sense. Just go get a job and you're better off. What we're looking for in a small business is to take some common sense things with employees, some common sense things of how to use money. I know many a $1 million business that has 0 employees, except the owner might be considered an employee. But they have 0 employees, and they're doing things with part-time work, and it works. And their expenses are kept fairly low. They're easy to adjust, and these people that are part-timers, they can kind of come and go and do work for them, and even do other work. So it's a way to go. So all we're looking at here is just being really, really, really smart with your money. So you can check out the podcast where we kind of went through this. I'm kind of going through it again a little bit based upon some questions that some of you have asked me. But you can check out the podcast, and this is just going to be, I'll put a link here, but the podcast is at dalecallahan.com, and it's at /118 or /118. And that's for episode number 118. But look, one of the things I'm doing here, I'm doing Facebook Live. This is an experiment kind of for me. So hopefully that some of you that are tuning in, that you're doing some of these experiments. Some of you probably done more than I have. So I'm experimenting with setup. My first time, well, not my first time, but my second, third time, the audio was awful. I was trying to use my new iPhone 7. It's probably not the iPhone issue. It was just something was wrong. So I'm moving to different formats, trying some different things. I need different backgrounds. But I mean, this is kind of an experimenting. And on this Facebook page, I don't even have that many people on this page, so yeah, it's a good place to test it. But thanks for you showing up and kind of paying attention to what we're doing. And thanks, Deborah, for being here with us, and some of the others that might have popped in and out. So, but I'm gonna be back. What I'm going to also post up here is a link to a survey. Hey, I'll just put it in the channel. A link for the survey for when's a good time to do this. I mean, I'm in here. I'm doing a podcast that comes out every Tuesday. It's called Company of One. And in the podcast, I'm talking about how do you help your revenue grow? How do you impact the company of one? How do you impact you? And then on Thursday, I'm trying to follow up with a Facebook Live, some of the questions I get from either the podcast directly, which I get some from that, or the some of the coaching groups I'm doing, or just the ongoing conversations I have with people every week. So that's all that we're going to do tonight. So thank you for tuning in. So we'll see you next week.